with just we're going to go ahead and wrap up here in just a few moments, and I know we've covered a lot of material. I do want to just get some final parting thoughts from each of our speakers. Plenty of time for you to share some closing remarks with our attendees. Paul, let's go ahead and start again with you.
I will just mention one more case that we didn't discuss, and I think I read it within the last 30 days, is a case where there were alleged director and officer liability, and the defense wanted to take it up on a motion to dismiss. I think it was Delaware, New York again, and the court said, with all these allegations, we're just not going to take this up on a motion to dismiss. In other words, you really have to get, because of the factual complexity of what's being pled and alleged here. We're really moving it to summary judgment. And when you think about this in terms of the context in which lawyers are dealing, well, all of a sudden, the value of that case from the plaintiff's point of view increased tremendously, because now you are, in summary judgment territory rather than a motion to dismiss territory. So I mean, it's like what venue can you really take these issues up? The recent case law I saw was a motion to dismiss is not it.
Excellent. Thank you so much, Paul. Gil, final thoughts from you.
Certainly. Two takeaways I'd like to mention. And if we can have our technician go back to slide 35, I'll mention this first. I did cover this during my presentation, but I'd like to emphasize it. For either those of you who are seeking coverage for your own organization, or you're advising clients about directors and officers insurance, please do consider some excess coverage, particularly on side A. You can get, this is purely excess coverage. You can get additional dollar limits, and particularly I like the difference in condition DIC protection, because that will give you some protection from some unexpected events that happen within the insurance industry on a regular basis, which is insolvency of an underlying insurer, or an underlying policy gets rescinded for some matter. You'll still have some coverage that will drop down to first dollar to protect you. So just please consider that. My second takeaway is to really, I think it is incumbent upon directors and officers to emphasize what constitutes wrongful acts in the first place and try to avoid that. Because the best defense is really some offense in just avoiding this and not getting into trouble in the first place.
Wonderful. Wonderful, Gil. Thank you so much. Yuri, do you have final thoughts you'd like to share with our attendees as we close?
Sure. So the first one I always like to talk about is, in closing, is California. California is different. So I think most folks assume that, business judgment rule is sort of a uniform rule that applies across the board. But the reality is that in California, the business judgment rule extends only to directors, not to officers, and this is codified in the corporate code. So it's sort of really important that if you're doing business, your clients are doing business in California, even if the company isn't organized in California, doing business in California, it's important to sort of hone in on this that distinction. So that's number one. Number two, again, I really want to emphasize that you'll need to put the issue of these data breaches and cyber-related liabilities on your radar. Don't assume you have coverage for them. Even if you have a cyber-type policy, it's important to look at sort of the interplay between what's covered under that policy and potential securities-related claims. And again, they're all just pieces of a puzzle. So look at the cyber policies, D&O policies, and general liability policies together and concurrently in order to analyze what the level of protection is under those policies for your companies and your directors and officers.